Black Friday sale as well right now. So if anyone's looking to extend their TradingView subscription, now's probably a good time. I'm trying to see if I put a VPN on, can I get around the VAT, bro? Because the VAT just is, oh my days, it's so annoying. They show you a price and you go to click on it and they'll add like, it'll go from like £500 to like 700 with the VAT. But hang on, let me share my screen and then we can get started. Hang on, losing my mind here. Where is it? Discord. There. Okay, we're gonna look at this. Not in forms of this, right? We know the ABCDs. We know all of that. Blow off top targets, doing its thing, like it's what it is. That's the whole key reason I kept telling you guys Bitcoin isn't where you make your money or your ROI if you're trying to buy it up at these levels, right? So Bitcoin dropping, whereas the sell-off is harsh. It's not selling off from a random area. It's not like, oh, someone just decided one day, let's nuke the market for no reason. Like, we were at very significant levels. We were at the blow off top targets. We only missed one of the three blow off top targets, right? Which are 109, 121, and then 132. The 132 is the only one we haven't hit. And there's no, it looks very, very improbable rather, that we get that 132 right now, but who knows, right? If you raid the lows or a buy step in force somewhere here, and you start reclaiming 101, 109, you just play level by level. Never say never, but also don't be entering positions there thinking, oh, we're definitely going to get that 132, because this is a nasty sell-off. Like I said, the first thing we'd be looking for now, well, eventually when Bitcoin does bounce, is we'll be looking for a lower high first and foremost, right? That's it. We'll just be looking for a lower high. Once that gets invalidated and key levels start being flipped to support and you get reasons to aim for higher targets, that's how you grind your way up to 132. Entering now and thinking, oh, we're definitely going to get 132, in my opinion, is just blind optimism, right? It's blind optimism, because that's not what the chart says at all. Like, it's just not. But the one I wanted to look at is, one sec, I think it's in this one. So, okay, not this one. It is, in that case, this one. USDT dominance on a tear. But first, let's look at Bitcoin. Oh yeah, that's the one. So, first and foremost, the butterfly, right? We got no substantial reactions at the butterfly. We got 2 days of sellers being absorbed, right? That's what we got over here. I pointed out yesterday. 2 days of sellers being absorbed. Like, the people who market shorted here. In terms of the candlestick, they were absorbed, but we didn't get any initiation. We didn't go and put like a, let's say, bullish engulfing candle in on the daily or anything like this to confirm really that buyers are really taking action, right? Remember, absorption on its own is not enough, right? Absorption's fine if you want to scalp, but if you want to actually enter now with the thoughts of, I want to go to 100k, I want to go to 108k, you want that absorption plus initiation to really let you know that, okay, things are going. Buyers have not only absorbed the sellers, but they've also then put in a aggressive candle where they've just gone and just market long the market board, right? That's the type of reaction you want to see down at these lows. Absorption plus initiation. We didn't get that. We had 2 days of absorption and then just continuation to the downside, right? So right now we're even below the 2025 6-month, 2025, the first half of this year, the buy zone mid, right? We're below that as well. We had a massive demand zone. If you want to look right now, we're at BTC, massive demand zone. This entire area you can think of as a big demand zone, because it is, right? Loads of orders came in over here. But at this point, below this, I'd want to see a rate of 74k, right? If you get it, I'd want to see a rate of 74k. Tab back to 68, I don't care, right? As long as we're below 83,948, these become targets, right? Not only that, but I also showed you guys yesterday, if I go to the, which one is it? It's one of these. If I go here, I also showed you guys where our volume-based key levels lie, right? If we go to Binance, and I'll turn off the last, actually, I'll leave the last impulse on right now. So, actually, let me do that. In terms of where our key levels lie, right? This is our current, based on the impulse we've had so far from 2022, right? this is our volume-based key levels. As you can see, I drew these on probably a bit too late. I only drew these on yesterday, right? But that's because, like, you know, October at this time, I was very, very busy. Right? I didn't have time to do this. It takes time. It took me like 1.5 hours to put everything on, line it up, so on and so forth. But once all those aggressive buys were trapped, and then we shifted trend for the first time on the weekly. If you take a look, the last high low that led to the high was taken out over here. We did go and put a lower high in. I only knew this is yesterday again, right? It's not like I took action off this one, this particular move here. We put a lower high in again at that 2.5 to 3 standard deviation range high / range low, right over there. And then the next area of support we found, of course, was the and then we turned the 2.5 into resistance as well. Then we tried to find support at the 2. We couldn't, so now we're dropping, right? The next one is the 1.5 again, which is around 71,980 to 69,888.71. Okay. The reason I had this box over here is because now if you consider the last sort of local impulse, which is of course this right over here, the volume-based data for that tells us that this was, especially if you look at it on something like the 4 hours to the 1 hour, that is where the 1.5 was, right? The 1.5 was right over there. Again, no reaction. It's just turned to resistance. So now you have your 2 right around over here, 79k. If you lose that, we're getting to 71 to 69, right? That's the next level you'd be looking for. Get below this, around 80,000, right? If I, to make this really accurate, I'm gonna go to the hourly. 1 sec. I'll just put a line down. Let's go here. And again, for those of you confused about how I got these extremely significant volume-based key levels, this is going to be on the advanced recordings for the volume-based fixed range volume profile lesson, right? I introduce you guys to volume-based key levels in core, and we get really deep into an advanced. This is an advanced, but there, 8106 basically, right? That's going to be a very, very important level for us to hold, because if not, then standard deviation 2.5 to standard deviation 3 for this range is pretty much going to take us. Just looking at this, like you can tell, standard deviation 2.5 is pretty much going to take us like somewhere within this cluster, right? Like you could just go and put a massive zone if you wanted to be honest. Let's do that actually. So I'm just going to do that as a low and to there. We could you just have this massive area you can wick into, and there's no. You can put the lines individually to really get that zoomed in if you want to scalp like precise entries, right? But otherwise, as a zone, right, there's no 2 ways around it. That's the zone you need to maintain. You absolutely need to maintain this zone, right? And you can add, because if you lose this, right? If you lose this, like I said, if you look at just our normal charts, if you lose that, you have 65k, right? 57k, so on and so forth. We'll talk about those levels, like should it come, right? Let's play level to level for now. I will be very, very surprised if they literally just give us a straight drop all the way down to like what I would consider to be like bear market targets, right? I don't think that's going to happen. I don't think it's going to be like a straight drop only to bear market targets. We're going to get consolidation and lower high at some point, right? But we've got our key levels there. We've got our key levels here in terms of buy seller zones. We definitely have key levels in terms of historical price ranges and key inflection areas, right? Is it this one? 1 sec. Key inflection areas. So next key inflection area again coming up right just below us. Historical price range there, right? So that's 9, 8. 1 sec. If I turn these 2 off once, that's what we have in terms of historical price ranges. So again, range low is going to be between 73,757 to 64,898. Right below historical price range mid, which we are right now, right? We're below that historical price range mid that we love. Is this until you reclaim that historical price range mid, you have to target this. If you get moves up and you start putting lower highs in at this area first and foremost, you have to target this. Only if you can go and flip this area into support do you have a shot at once again getting to 100k and above, right? So no matter whether you look at it in terms of historical price ranges, key inflection areas, you look at it in terms of buy-seller zones, right? And again, another thing that we need to consider, of course, is the diagonals. So let's once again quickly update the diagonals. There is the macro fib channel. You are now approaching the 0.94, the liquidity rates, right? Front runs gave you no reaction, so now liquidity rates between the 0.94 and the 886. You want this diagonal here you want to see some sort of reaction coming in over there. Again, resistance, support. So, that is a very important key SR level in terms of diagonals, right? We can see that resistance there, supports here. So if you can find support there again, potential for a lower high, wherever that may come in, we'll just keep an eye on the price action once we get a confirmation of, okay, we look like we're having a little rebound, right? But not only that, the main thing, of course, is the fibs speed resistance fans, right? So macro fibs speed resistance fan approaching. That's the 0.5, that's the 586. That was the front runner of the golden pocket. We are now at the golden pocket. This right here is the golden pocket, right? Once again, it's been support before. So if you're going to expect a bounce, it'd be somewhere around here. If this doesn't give you a bounce, the next area is, once again, if you look at where we are, even towards the end of December, January-ish, right? 70k. So you have intersections for those lower areas we're talking about, right? Because that's your liquidity rate of this channel, right? That's your liquidity rate. So in terms of diagonals, if you're looking at intersections, we are at the areas we were talking about, right? Where we were saying we need to hold it. We are there as we speak. The first area that absolutely needed to be held, right, was that right there. We didn't hold that, so we have a very new area right over here. Massive intersections here. If you lose that, your next set of intersections, once again, is a 70k. Right? You have intersections, the intersections here are very, very simple, which is one benefit of this dump. This aggressive dump, the way this is going is telling us that, okay, I mean, if you lose this level, here's your next. If you lose this level, here's your next. And you have very clear time slots for when that's happening, right? 2026 of May for 55k potentially, right? May 2026. Or for 57k, you have potentially as early as to 2026 January if the sell-off keeps accelerating. Not likely, since we're at support and we haven't lost support yet, right? We can't just say this is going to go here when you have supports above you. But I'm mentioning time frames, right? For now, these are the potential and the most likely time frames for these prices to come in. Below that, we've got by the end of November, start of December-ish, right? Or even towards the end of December, we have a little period where you can chop around 71 to 72k. That's probably the likely one if we lose this, right? And of course, as long as we maintain, if we manage to maintain above this particular intersection by the end of November, December-ish, right, mid-December-ish, which is around 81 to 82k, there's always a possibility for us to go up and put a lower high in somewhere higher. Right, because we have still got intersections above us that also go towards May 2026, right? So we have intersections to the downside, to the upside. Currently we're at support. Just play level by level. You have potential dates of either side of the market. We're not perma bulls, we're not perma bears, right? We're bullish when the trend is clearly to the upside. We're bearish when the trend is to the downside. When you're at supports, right, we're going to be neither. We're just going to see what kind of reaction do we get. That's going to tell us which direction are we going to be positioned for, whether that's a scalp, whether it's like, and then of course the trend is going to tell us, do we scalp, do we swing? Like any moves from here, you're going to expect a lower high. Therefore, you're not going to swing it, right? It's going to be like a scalp to swing mindset right now, right? So we have, those are the dates and those are the key areas in terms of the dates, right? So we have diagonals, we have horizontals, right? We have everything we're looking for. You can look at log as well, of course, right? We have volume-based key levels as well. So we just want to see what kind of reaction do we get. I don't think this, I'd be very surprised if they just bounce here in the middle of nowhere like this, especially like I said, especially when we have 83,948 currently as resistance, right? If that's resistance, I'll just expect 74k to come soon, right? 78, 74, 68, 65, so on and so forth. We've got the levels there, but let's just see what kind of live reaction we get, right? The weekly, the 2 weeks, it closes in 2 days and 15 hours. If you can close above 83,948, that might give us a nice reaction up for a lower high around 93k perhaps, right? 90k. They push it higher towards 100, but yeah, let's just see, right? That's it. We just have key levels. We just wait for reactions, and once you see the type of reactions you like, you can scalp, right? Scalp the swing. I definitely would not be, I mean, if there was ever a point where you're gonna enter something for like a swing trade, arguably it'd probably be like if you see like a very tight horror opportunity, it'd probably be now, right? Like areas like this. Like I've been telling you guys, don't enter Bitcoin swings, don't enter Bitcoin swings, don't enter Bitcoin swings all the way up over here. Now that we've had such a steep discount, and by the way, this in terms of percentage is a 35% discount, right? Remember, 25 to 35% discounts have been the norm, right? For like deep pullbacks during a move up. Same thing we had over here. This one was a 31% discount. Same thing we had over here. This one in total was a 33% discount, right? So the context is different here. The context is different because even weekly higher time frame trend has been lost, right? Obviously, higher time frame trend has been lost. We know that. we've lost the 50-week moving average, whereas in both of these moments we were above the 50-week moving average. So the context is different. But one thing you have to note is this is not out of the ordinary, right? This is relentless sell pressure for sure. This is the nastiest sell-off we've had, even if you compare it to before, like where you had some consolidation to two drops. But in terms of like a percentage drop, this is fairly normal for Bitcoin in an uptrend, right? And the monthly is still in an uptrend. Of course, since it's such a high time frame, we can't just sit here and say, oh, the monthly's in an uptrend, don't worry about it, right? Because like I've been saying for the for the last few months, right? For the last few months, like I've been saying, you can't just rely solely on the high frame unless all you do is like, high time frame spot swing for like holding years and years, right? Because looking at the monthly, we still look fine, but the fact of the matter is, if you'd entered thinking we're fine anywhere up over here, you're still down like 23%. Do you know what I mean? So this could put in a high low for a monthly, right? If we can close above 83 and we can go and reclaim 93, who knows? But the chances of that right now look extremely, extremely slim, right? I'm not going to shy away from bearish arguments. I'm not going to shy away from bullish arguments, right? So monthly, I repeat, still has a high low potential. But what's the likelihood of that is the question. And right now, the likelihood looks extremely grim. Right? There's no reactions coming in at any key levels. But like we said, we looked at diagonals, right? We have very key levels diagonally. In terms of volume-based key levels, we have levels slightly below, but we're approaching very key levels in terms of volume as well, right? So if the one opium for bulls right now is monthly puts in a high low, and then we can by the end of the month, we sort of by next month maybe start that relief move to the upside, right? Otherwise, if the no reaction comes in here, why would it randomly bounce from here, right? Like in terms of like just horizontal levels. I see the lower high because, like I said, I like precise entries, right? If you draw a zone, sure, you add a zone where you're interested. But again, for me, the interesting zone is slightly below, right? It's 80k and lower, right? And that's the next interesting zone because we've lost 1.5. There was no reaction at the 1.5. So the next interesting zone is down over here. Now, one more thing I'm going to put on the screen here is this. So this now, if you look to the left, that's from the last bear market impulse, okay? This is the last bear market impulse. So if I do this... that's the last bear market impulse, okay? And the reason I've got the bear market impulse is very simple. The way I see it, the two main impulses you're going to be taking is going to be what happened last and then what happened before that, right? So in terms of that, what we have here is these on the right, based on the impulse up we've had since 2022, right, based on the impulse up we've had since 2022, the bull market we've had since 2022, where do we retrace to? That's very, very simple, right? My reasoning for putting this on as well, which is the last bear market, is this bull market broke out of the last bear market levels, right? Whether you consider them to be fibs, whether you consider them to be fixed range volume profiles, whether you consider them to be, just horizontals, whatever you think, this is the cycle that gave us that breakout, right? So now my reasoning for putting these on is, if we are now going to have a pullback, we're going to be looking at this as in the lens of a retest. Okay, so we're going to be retesting the bear market volume levels, and that's going to be giving us confidence. Because of course, if you're bullish and you want to put in macro high, low, so on and so forth, you want to do it at areas where previously, the last time sellers were there was resistance, right? You want to flip that into support. Very, very simple. We've obviously done that on the way up, right? We can see that very easily. We've done that on the way up. However, the context now is different. We've had the resolution of the trend, and now we just wait to see, can we go and flip key levels from the last bear market into support, which is going to then catapult us towards the next impulse up. That's my reason for putting this on. If you wanted one more set of macro impulses, what do you think you would do? You would put the last bull market impulses on, right? Just because the argument there would be, okay, buyers were active here last cycle. Now that we're getting a retracement again, let's see if they step in again. But for that, I would rather just look at levels compared to current cycle, right? So these are, in terms of volume-based key levels, these are the main ones. And then after that, of course, currently speaking, we're still within this impulse, so that is the other one that I'll be looking at, just as such, right? So we have loads of key levels for Bitcoin. We have loads of confluence for Bitcoin coming up, right? Like I said, we've got dates on our hands, especially for May 2026. That seems to be a big one, right? We've got dates on our hands. We've got we've got the significant levels on our hands. We just need to read price action, right? So far, reading price action has been simple. Buyers have not been getting the reaction that you would to enter like big positions, right? They just haven't. Even though there's been aggressive selling, and like I said, when I posted that yesterday, there were 2 days, right? There were 2 days of sellers being absorbed here, right? Which was nice because sellers were being absorbed at a key area at the completion of the butterfly, but we didn't get the absorption. Just absorption is not enough for high time frame reversals, right? You need initiation. We didn't get any initiation. That's why I said I want to see those pointer controls, right? If we go to Discord and I go to what did I put exactly, so I'm not misquoting myself. What I put was closes of the pointer controls of set candles, right? Those set candles, the pointer controls, we didn't close above, right? From this point yesterday, we just kept going down. The pointer controls, they didn't even get regarded as support. So even though there was some absorption going on, ultimately sellers were still rewarded, right? Reading this, the pointer controls, the value area highs of the absorption candles turn to resistance still. We can go and take a look at this live, in fact, right? I looked at this for this chart here, and I can turn on group 2 for this, right? Because we were over here yesterday. And if you now switch to the footprint charts, this is where we are, right? This is where the seller absorption was coming on, right? Look, negative delta of our pointer control, of our value area low, of our value area high. That's seller absorption, right? Again, negative delta of our pointer control, of our value area high. But look, that one where I said I want to see a close above the pointer controls, we never got it. That is peak, right? We never got it because, again, these are the moments where it's sort of like the make or break, right? Because, okay, we've got absorption now. You're at significant levels, you've got aggressive sellers coming in and they're being absorbed. So this is the one chance buyers have to, okay, we've absorbed them. Let's put in a engulfing candle or a bullish engulfing candle. Let's put in an aggressive candle. Let's initiate, right? That's where the word initiation comes from in this context. Let's initiate a buy campaign, right? To go against these trap sellers, and let's liquidate many of the people that were opening shorts on the way down. As you can see, everyone is. That's the chance buyers had, but they didn't take it. And if they didn't take it, what's that? That's the biggest sign of a middle finger to buyer strength, right? There just isn't any buyer strength here. So those aggressive sellers, even though they had a shot at being trapped, right? Obviously, it's a big risk. Whoever shorted here, they rolled the dice, right? Because people who shorted here, they market shorted at support after like a 30% drop. They rolled the dice, and in this case, like they managed to get a pair of sixes, right? That's it. Otherwise, this is what I want you guys to not do. I don't want you to be a part of the people that are market shorting at support, because majority of the time this doesn't play out. Right? If this played out this time, sure, because there's severe weakness, but consider the times this hasn't. How many times have we looked at charts? Right? How many times have we looked at charts where there's been huge aggressive selling going on at support, and the aggressive selling is not rewarded, and that not being rewarded leads to buyers actually taking control, right? They initiate a buy candle, and then from there, boom, gone, right? ETH, of course, being the last example. How many sellers were there at 1,500? Aggressive sellers. They all got absorbed, trapped, right? This is how you set yourself up to be trap traders. In this case, these people who shorted it, like, don't get it twisted. These weren't good shorts. They're not good traders, okay? This is simply like people joining in late into the trend and being rewarded. These shorts, in my opinion, they're not safe. I would be very surprised if they let these people get off scot-free when they're shorting at support, right? They will get ran at some point. They will get ran at some point, in my opinion. I do not see how they reward this behavior in the market. But yeah, so if if no reaction comes in here, 74k, I think we get to the 70s. Yeah, let's see. But that's that. Of course, that hasn't played out, so we're going for the 886s next, right? So considering the 886s, what do we have? We have this, where we currently are. Shark, right? There's your 332. It'd be nice if that was a 382, but it's fine. For a shark, it doesn't really matter, right? The C point is a raid, and this right here, your 0.886 is just below. You have a shark, and you also have, of course, a bat. It's a bit past the 2.618, but again, it is a 886. So that 886 is going to be a nice area to watch. So you have a lot of confluence here, right? It's a big demand zone. You have that 886. You have the diagonals, like we were mentioning, right? Volume-based key levels you have lower, right? So anything you take here, again, it's not going to be a swing. It's going to be scalp to swings at the most, or just typical scalps. And from next year, I will be pivoting back to scalping, because I think I'll have once the new restaurants open, hopefully, I'll have some time, at least a few days a week, I'll be able to scalp again, right? So I'll be reopening my scalp account. It's been collecting dust for the last year and something, right? Especially the last 2 years. But I'll be pivoting back to scalping. I can't wait, because higher time frame, lower time frame, that's my bread and butter, right? Either swings, like massive swings, or just like momentum scalping, lower time frame, like tick based, 1 minute, 3 minute entry model scalping, reactionary scalping, looking at the order flow, right? That's my bread and butter. That or swings. Like if you ask me to give you like or rather if you ask me like to take a medium time frame trade, do you want to hold something for 3 days? Like I don't like doing that, right? The only way I do that is if I initiate the trade as a scalp, and then I've gone risk free, I've taken profits, and then I can turn it into a scalp to swing. That's the only way you'll ever see me holding a trade for like, let's say 3 or 4 days, something in the medium time frame, right? Otherwise you see the lower time frame straight or higher time frame straight. So I can't wait to get into that. But yeah, that's BTC. Nothing much else for it, right? We're approaching the 886s. You lose the 8. That's the last sort of. That's the one area you've got here now, right? It's those 886s. You lose those 886s. Like I said, it's like 70 to 60k even on deck, right? 78, somewhere around 78. Let's see what happens at the 886s, right? But below that, 74. 68. This the volume-based key levels we're looking at. This. That's what you're going to be after. So let's see what kind of reaction we get, right? There's been a huge amount of aggressive selling going on the higher time frame. If you look at the weekly, if you look at the 2 weeks, just insane sell candles. You will get like a lower high, in my opinion, right? At the least, you'll get a lower high at some point. Like I said, I would be extremely surprised if they just kept dropping this. This would be the nastiest work the market makers have ever done if they just dropped this straight to 78k without any signs of a lower high. Right? If they do, like, fair enough, like it's like whatever, but you'd want to see that lower high, right? Ideally, like I said, ideally you want to see that lower high. Let me check back to the chat before I carry on rambling. So see if you guys have any questions. Hang on. Yeah, bro. I paid tick-based charts as well, so it's you have to pay extra for it. I think it's the ultimate version on TradingView, but I've got the tick-based charts here too. For those of you not familiar, does everyone here know what tick-based chart is, or do you want a quick explanation of what it is, and why, in my opinion, for scalping is superior? Yeah, sure. So time-based charts, right? What you're typically used to: 1 minute, 3 minute, 5 minutes. Every single candle you see is a representation of that set time frame, right? So for example, this right here is going to be a 5-minute candle, and the 5 minutes is going to be up in 1 minute 30 seconds, right? This is a 5 minute, that's a 5 minute. Switch to the daily, every candle is a daily, so on and so forth. So what it's showing you is during that set time frame that you're looking at, right? What is the price action? What was the price action for that time frame, right? So for example, yesterday, this was your range, and price overall declined after that day was up, so on and so forth, right? On tick-based charts, what it is you are no longer looking at candles in terms of time frames, but rather you're looking at candles in terms of executed trades. So if I'm on one tick, right, what this is showing me is every time a contract is traded for Bitcoin, it forms a new candle. Right, so one trade. Every single time you see a tick, that means that a contract has been traded. So if I'm on one ticks, any single time, either a long or a short, doesn't matter, right? But anytime a contract is traded, so in this case, if I'm on one tick, every time one Bitcoin contract is traded, it creates a new candle. Similarly, if you're on 10 ticks, every time 10 Bitcoin contracts are traded, it creates a new candle. If I'm on 100 ticks, every time 100 Bitcoin contracts get traded, it could be to the long or to the short, right? You can see that using the color of the candles itself. A new candle is printed. And in my opinion, this is superior, right, for scalping, because this isn't time-based, right? You every time you see a candle, you're literally seeing what is happening in terms of the executed trades. If you see that red, that means the last 100 traded candles for Bitcoin were shorts, right? In this case, short side, right? Or sells, because I'm on the I'm on the spot chart. But that means the last 100 trades were sells, right? So you can see that. So you can get a much clearer, like if you're looking at, whether you're looking at footprint charts or whether you're looking at reactions around key levels, you're not getting it based on time, you're getting it based on the actual contracts traded. So if you see a green candle, right, coming in at support, then it's not based on time. It's literally that, okay, that green candle is representing that buyers are stepping in, right? So this isn't based on time. This is based on the amount of contracts executed. And again, for scalping, as you can imagine from the explanation, that is, you get an edge over just time-based charts, right? Because you can physically see when, like, the green candles are coming in. You can see the reaction, right? Do you want to see buys, like, stepping in? You can see that literally from the color of the candle, right? So that's what the tick-based chart is. Does that make sense, guys? No problem, bro. But it's, yeah, for scalping, it's very, very nice. So the only other software I really use right now is Atas, and that's not all the time, bro. Because Atas is, I know you mentioned the pricing the day. By the way, you don't have to buy it, Jasper. For crypto, Atas is free. You have to buy Atas, like the data feeds and stuff, if you're trying to scalp Nasdaq and stuff like that, right? Otherwise, for crypto, like, Atas is free. Yeah, you still either for what I use it for is hang on, let me see if I can open it here. So I use it to see the depth of market, the tape, and just another way to get footprint charts, right? But if you want to buy it, you can do that as well. Of course, not stopping you. I think it's a very, very good platform. Yeah, the TA is the same, bro. So the best thing to do is to get your you can get your key levels off time-based charts, right? Get your key levels off time-based charts, and then switch to tick-based charts to actually get the reaction around those. That's the best way to do it. Okay, let me connect that. I just need to know, every time I update this, it gets rid of my it's like Velo. Every time I update it, it gets rid of my what's the word I'm thinking of? My configuration. So if it's got rid of the configuration, I know for a fact it'll be on my laptop. So I'll do a stream again on Sunday. I'll do it from my laptop, and you can take it from there. But if I just go and let me see, which one is it? It's one of these. In fact, hang on. Let me do this, yeah. One sec. Let me open on my laptop, and I'll quickly restream from my laptop, because my laptop will have this open. One sec. Yeah, because every time this updates, it gets rid of my cluster. This one here. Give me a second. I'll like restream from my laptop, and then after that I'll just switch back to my PC. Booting it up now, one sec. Come on. Yeah. Okay, I'm going to end this active session.
Connection lost.
Because you can only do it to one account at a time. So I'll end the active session on my PC, and I'll share it from my laptop. Oh yes, yeah, I knew I can trust my laptop for days, bro. There we go. Okay, so what I'm gonna do is let me quickly restream. One sec. Shut up, please. Get out of here. Close. Oh, hang on. Oh, it's actually giving it. One sec. One sec. Okay, no, I don't even need to switch to my laptop. It's right here. Ignore the noises in the background for now. But this is my typical scalping setup on Atas. This is free, by the way, right? Free. But what you see here is your typical footprint chart, right? There's your footprint chart right there. Oh wait, one sec. Let me share let me change the screen. Change stream to this. There. What you see there is typical footprint chart, right? Just like you would on TradingView. But you also have the depth of market, and then you have the tape, right? So you can see, okay, how much is coming in, how much is not coming in, and you have your actual depth of market over here as well, DOM, right? So this is the DOM trader, this is your tick-based charts, and this is basically, this is just going to show me when big orders open up in the depth of market, right? When big orders come in, this is going to change with the lines, and if a big sell order comes in, you're going to have bubbles showing up, and then that's going to be represented on tick-based chart. It's a nice visual way for me to know when a big orders come in, when a big orders not come in, right? But let me quickly stream from my laptop. It will make more sense. One sec, because this thing is noisy. Please shut up. Yeah. Ask again later. Yeah. Okay. So I'm going to restream from my laptop real quick, and then I'll jump back over here, right? But if I hopefully this is working. One sec, let me just share. There we go, right? So this right here is what it looks like when it's actually, because for some reason this was frozen on my computer. But there you go. This is got volume profile on the left, got footprint charts here also, of course, right? And then this, like I said, that's your depth of market. This is what I was talking about, the bubbles, right? When you see the buys and sells coming in, it's going to correlate to that. So this is the depth of market trader. And then, yeah, that's just the footprint chart. This is the extremely zoomed in version, so I can see what's happening on a candle to candle basis. Right? But this is typically like, I'll have this on one screen, I'll have TradingView on another, Velo on another, typically, right? Because I have a tablet, phone, laptop, and a PC. And then between Velo, between Atas, and between TradingView, between those three, honestly, you have everything you need. You do not need anything else. Do you know what I mean? But yeah, so that's what it looks like for Atas. It's really good. Like this is free. You don't have to pay for this. I don't know how long they'll keep it free for crypto, but like if you're thinking of scalping, literally just Bitcoin even, right? You don't, for now anyway. You don't need to pay. Can you guys see that on my screen, the Atas, or yeah, okay, yeah, okay, nice, yeah. But yeah, it's very good, bro. You don't have to unless you like if you want to do Nasdaq, you want to do indices, so on and so forth. Then you're gonna have to pay because that's the most traded markets anyway, right? But say that again, sorry, brother. One sec. Let me switch back to my PC because the headset I'm using for this is absolutely terrible. I can't hear what you said. One sec. Just wanted to quickly show you a task. But let me go back to my PC. There we go. What were you saying, sorry, bro?
I just asked if you were recording this.
Oh no, yeah, I'm recording this, but just that part right now on my laptop, that won't be in the recording since that's the
Right, yeah,
switch.
that's
Yeah.
fine, that's fine. Are you still gonna upload to YouTube or?
I'll upload this one to YouTube, yeah, because
All right, okay, cool.
it's just otherwise it's gonna seem like I've just fucking like dipped from YouTube and the markers have been read. But from going forward, all our recordings I'll still put on YouTube, but I'll just make it private. I'll only put some publicly. That's what I meant. It's not. I didn't mean. I think last time people thought I meant I'm just not gonna record any of the sessions. I record and put it into YouTube, but it'll be like a private link, so only you guys can see it, basically.
All right, sounds.
Yeah. But yeah, I can say aggressive sellers are still being rewarded. There's literally nothing going for it right now. It's a shit show. I just want them to take that 80k. Tag standard deviation 2.2, 2.5 is going to be somewhere around here. 3 is going to be here, right? Just this big cluster. And if you go that low, honestly, I want them to raid it. I want them to raid, go to this area, and after that, we can, retest 2021 all-time high, and then just send it from there. That's what. If you get this, I would want that. I would not want them to leave this behind. I'd want them to raid it. But let's see what happens. I'll do a stream on Sunday again properly for olds, but otherwise I still think many olds are looking like, in terms of like spot bids, right? I think still many olds like look good. Tau, like I said, I'm going to be adding to this one. Literally the reason I want Tau, same reason why I wanted Zcash, right? Before, like, holding it for so long. 21 million fixed supply, right? That's just always that magic number in crypto. Because, if it's fixed supply, it's got a way better reason or way better argument as a hedge against inflation, as a hedge against monetary debasement, right? So Zcash, another one that had 21 million, right? And then, you get the argument of, 21 million is going to be harder and harder to get those. There's a finite supply. That makes sense for why people will go to that as a hedge against, like, the dollar being raped, right? Same thing with Tau. Only 21 million fixed supply. It's got the halving coming up in December. This is like Bitcoin AI, basically, right? So I think the narrative is there for this, right? Unless the AI bubble absolutely pops, I think the narrative is there for this. So I'm going to be looking to add more into this. Whatever spots I'm holding, I'm just holding that, right? Whatever I bought before. I've still got a lot of cash to deploy, both in the challenge account and in my main account. But I'm not going to be deploying randomly like this. I don't care if I have to buy back a bit higher. I want to see structure before I add. You guys know I don't just set limits and just forget about it. So I want to see structure. But some of the coins I still really like the look of, right? If you take a look at coins like CVX, this is at an area where it's, in terms of a spot bid, is the easiest it is to manage your risks. And hopefully you guys can see why. If you just consider where we are on this chart, right, for this token. So this was the best one here. If you're wrong by percentages, right? Not by much. If you're wrong by, for example, if you lose this, there's no way on earth you'd want to be holding this. It's as simple as that. You don't want to be holding it below this box. But as long as you're within this box, used to be a order block before, right? Is literally around the 2021 lows. So if you're wrong by, let's say 8.62%, which of course is still a lot in terms of 8%, right? But in terms of like a spot bid on a altcoin, right, which is literally at the lows, it's not much, right? So if you're going to take and you don't have to go all in at once either. So if you're going to enter anything, it'd be coins like this, in my opinion. You're going to take a bet on anything anyway. I don't know what CVX is. I don't know what CVX does, right? Convex Finance. It's probably some sort of like finance token. But in terms of risk to reward, is there a short sale? And the answer is yes. Again, remember 20-40-40, you do not go all in when you're trying to catch that knife, right? But is this an area where you would like to deploy some capital, maybe 40%, right? Something like this. Yes, and you leave that 60% for if you actually buyers hold this level, and if you manage to flip the trend, so on and so forth. You guys know how 20-40-40 works by now, right? And if not, you're wrong on that 40% by 8.62%. So it couldn't be easier to manage your risks, manage your entries on here. Right, CVX, Asta being another one. This one's been holding up really well. But if you go back here and I go to Asta, one sec. Hang on. By the way, I still like how ETH against BTC looks. It's kind of crazy. The thing that's holding up the best right now, aside from just being in cash, is literally the ETH against BTC challenge account, right, and LTC against BTC challenge account. Refuses to drop below 1,000 in profits. I might be jinxing it. I hope I'm not jinxing it. Touch wood. But it looks good in terms of this drastic sell-off, right? ETH's already down towards 2,000. So unless you think ETH's gonna go to 800 in one candle, which I very much doubt, right? ETH against BTC literally looks scared up. This is the type of area where you go sideways for a bit, people don't really pay attention, a bit of chop, and then all of a sudden you're breaking out, and all of a sudden you're getting nice candles up, right? So I still have hope for ETH against BTC. I think this looks good. Above the macro point of control especially, this looks amazing. IOTA, I remember this one. Take a look at this, right? I know we've gone over this many times, but just take a look at where it is. 20-40-40 for this very reason. But if you are wrong, while it's big, right, it's 27%, that's why you don't go all in here, 20-40-40. If you have a 27% drawdown, I'd use between 20 to 30%, anywhere between 20 to 30% for initial spot bids, and then the rest, like, split it into two. So let's say you use 20%, or let's say 30% even, right? Let's say if you were to get into this 30% current prices, you have 70% cash left, split that into half or whatever you want, right? If you split that into half, that's 35, 35. 35% for that is just DCing if you go even lower. And the remaining 35% is strictly for if the trend shifts, right? That way, you have a position now. Let's say if you wanted to get in, of course, I'm not saying this is how I do it. I'm explaining how I would do it if I was going to get into a spot position. That's how 20-40-40 works, right? You have a current market price allocation, you have a DCA allocation, and you have that trend shift size up allocation, right? That way, even though this says 27%, realistically, let's say you get in, right, with 30%. Even if you don't size up, that 27% is risking only that 30% allocation, not your full position size. And if you slowly DCA into this as it goes lower, of course, your average gets better, and you're bringing the average down, right? Which and compared to your average position size, your actual risk is getting lower, right? In terms of percentages. And again, you're still not fully allocated because the trend hasn't shifted. That's how you position for spot over time, right? That's how I did it for the last sets, right? When we got into all those spot positions, whether it be ETH, whether it be, we got so many spot plays off over the last 2 years, right? A lot of isolated swings as well. That's how we got in, right? And for that reason, because we saw how 20-40-40 saved our assets how many times, because we did not, like, it's not like we had perfect timing on every single altcoin that we got into over the last 2 years, right? We didn't. But what we had was the ability to mitigate our downside, mitigate our risk, and get in a way where we're not going all in at once. We had ammo for should we dip deeper, and we weren't fully allocated until we were on the right side of the market. That is your best friend, right? Capital preservation is the name of the game. Like we always say this, that's what it is. So there's IOTA, right? FET is another one. I've already mentioned this. It's at very, 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 very nice levels, right? Still holding above your macro, your last bull market impulse, like value area low and point of control, literally still above that. If I was to draw this on, there you go, right? We know there's PRZs for harmonics here. This was shared way ahead of time. We finally hit those from the liquidation wick, and we're holding at there right now. So FET, there's so many, right? We'll go more into alts in the Sunday stream when I stream on Sunday, but there's a lot, right? ICP, we're looking to size back into this, right? Finally, we're getting that pullback back to those key areas. Same reason, that 3-minute distribution. Right, is why I showed you guys I took profits on ICP when I did, and now we just size back up with what we took. This could be glorious for ICP because this looks something along the lines of, this is where your original accumulation was, manipulation, and then for the distribution phase, this is just a retest of that distribution, right? So that retest could send us higher as long as this PRC holds. So many alts like this, right, which are at an LTC. Look where everyone started shilling this, and look what we're doing since then. Right, everyone started shilling LTC Wiz, so on and so forth. Everyone started shilling this once we were at like 115. You never get in at 115. That was range highs, right? Insane. But there's loads, right? Again, we'll look at this properly. We'll look at this properly next stream. Loads of alts, right? Because I do have to get going. I've a lot to do at my restaurant today. The kitchen's basically done now. I'll once I clean everything up, I'll send you guys the photos. But it's the outside bits. Still a lot needs to be done on the outside, which I'm going to get started with today. But yeah, Zen. Let's take a look. So Zen was another one that played out, by the way. Ronnie tagged me in this, letting me know it played out. I couldn't update it because I was so busy. But this right here, that entry trigger I gave on Crypto Chat, right, which was the M-shape completion, and if the M-shape completes, you get in at the PRZ. That hit on Zen. Right, it was right here. We went to T2. There we go. That's where it was, right? So I gave this one here. Again, where was it? I think it was in Crypto Chat. Let me just make sure I'm not saying the wrong things here. Was it in Crypto Chat? Yes, it was right there, right? This was in, I think, November 14th. I think, yeah, 14th of November at 2:52 p.m. It was that one there, right? M-shape here. If you hit the lows, you just need to get above that red line. You're good to go on Zen, is what we were saying. And yeah, that one right there. We hit T2 and then dropped. But yeah, Zen, like, many alts look good. Considering what Bitcoin's doing right now, like think about when Bitcoin's on the way up, right? A 2% drop on Bitcoin would new cost like 8 to 10%. Bitcoin has dropped an insane amount, right? Also dropping literally at the same rate Bitcoin is. In terms of percentages, that's the crazy thing. Now look, Bitcoin is down 5%. Many also down around like 5 to 8 like we've seen, right? If we go over here. Like, oh, they're holding up very, very well. And the reason for that is because look at where many of these alts are. There is hardly any benefit for taking CVX below this level. There is hardly any benefit for taking ICP back below this level. There's hardly any benefit for taking Fed lower and lower. Much of the liquidity here is going to be to the upside, not to the downside, right? Unless you want to nuke everyone who's ever been in this chart and make it so that this probably isn't a chance this asset comes back. You know, some lows are going to be defended by the whales, right? And you know, there's no guarantees, of course, that the defense comes into play over here. But these are the areas where if you're going to take a risk, like I said, you want that asymmetrical bet, you want to take a risk, this is where you would do it, right? This is where you would take that risk. But yeah, there's loads. There's a load of alts to look at. Aptos, I'm really eyeing this one. We tried our luck here. It didn't play out, right? So we got out this break even and a bit just below break even as well. But looking to literally get back in. What we've done on Aptos now is beautiful, right? Because where we are is this one here. If I go here and I do this and I do this once, turn the harmonics off. First and foremost, yearly view. The only level you have below this is literally rating exchange listing lows at $1, right? So first and foremost, even just on a macro scale, literally on a macro scale, your invalidation is clear. Below 2.224, you don't want to own Aptos. You don't want to own this below 2.224 until it either reclaims 2.224 or you go and raid $1, right? Because below that, unless you go to something like the weekly and look for more like, you know, zones within that area, there's not much that's keeping us up here above 2.224, right? Even if you go on the weekly, there's no reason to own this below 2.224. There's nothing until 1, right? But as long as you're above 2.224, you are above a very real level. You're above the mid of the area in 2022 where buyers retained control, right? It's not a surprise that that is the exact level we pinged off during this dump, right? Buyers are stepping in where they need to. Now, what was something I pointed out to you guys yesterday? It was these harmonics here. Right, so if again, you know, aggressive sellers start coming in here and they're not rewarded, right? Which we can see, aggressive selling is coming in, they're not being rewarded at this godly 886, shark 886 for now, right? And in fact, I think you've hit the 2.24 of the shark, haven't you? Well, close to hitting the 2.24 of the shark. If you want to, if this gets a really deep extension, it's going to be to the 1.13 if it drops one more time. But if you go to the 1.13, you're just going to have a really nice area to bid, right? Obviously, below this, you're not going to hold if it's like a leverage trade or a scalp until you get to the next area anyway. But if you want to build a bag out over time, you have a couple options. You can either do it basing your risk around these levels, right? So you have your PRZ, and of course, we know based on the previous 4-hour candle, that's the mid. So you have the buyer zone of that liquidation candle there. You have the mid of that, right? Aggressive selling is going on. You're not losing the mid. You're not losing the PRZ right now. So if you wanted to take a scalp off this, you would go to the lower time frame, and it would be something like this, right? And so here, you get below this. You get below the 0.5. You're not interested, right? So close below 0.5. If you want a hard stop loss, I'll just put it something like that. Right? Just keep it tight. Especially if you do it percentage wise, you could do a 1% stop loss, something like this. And for a scalp, risk to reward 3 minimum, right? But ideally, what are you looking for? If you get a move up, you're looking for liquidity to be rated. What liquidity you want to rate? This right here. If this rates, where's the logical place you go to? Right here. It's that simple, right? And after that, you don't overmanage, you don't do anything. You simply enter your trade, and you either get stopped. Remember, for a scalp, you don't DCA unless you want to do a few candles at a time, right? You either hit target or you get stopped out. Something like that, right? For a scalp. For a scalp to swing, you start off with a scalp, and then you're looking for signs of trend reversal. You're looking for signs of, like, you know, resistance being flipped to support, so on and so forth, like breakout high, low, trend shift, to then size up and turn whatever position size you had left on the scalp to then a swing, right? And lastly, the other thing you can do is, if you enter spot you can either manage your risk just like you could enter like big spot position, 1% downside easy. You can trade with just a spot bag if you want, right? Or you can start doing your 20-40-40 here, right? If you start doing your 20-40-40 here, you don't have to worry about being as tight, right? You know the range, what the range you're working with is. But again, if you want to keep it really tight, you don't want to be holding in the red massively, like you just want precise entries, even if it's spot, then you can manage your risk with spot in just the same way. Because below this level, you have a shot at entering at 242, and if you get below that, your next PRZ is going to be down over here, right? So you have a very nice scalp opportunity right now in front of you. Like if you get stopped, you get stopped. If not, like you'd go towards your target. You'd see what kind of reaction you get at 254, right? And if sellers just look like they're not letting buyers do any work, if buyers are constantly getting absorbed, you can take profits early even though you're not hit your target. Remember, with scalping for me, it's about active management, right? I know my target's there, but if sellers aren't letting me get above this point, what's the point holding? I don't want to give anything back, right? So you have one sort of level to contend with on the way up, but you get above this and you get that target, right? That's it. So if you don't see any weakness here, you don't need to take profits, right? If you see weakness coming in here, if you see buyers getting absorbed, so on and so forth, you can just close your scalp out, whether it's partial or you're full. Just get out of it and just enter if you flip this again. It's completely up to you, right? But there's on the lower time frame, there's many ways you can play it. That's the key thing. But coins like Aptos, right, that have taken out literally everything. The only thing it needs to take out is this actual low, and there's no guarantees this gets taken out, right? These are the kind of tokens I want to be paying attention to now. Not because they're strong. It's not because they're strong, but it's because of where they are and what kind of directional, like I keep saying, asymmetrical opportunity they provide. These are the kind of ones I want to be looking at. And we'll look at more of these, like I said, on Sunday, right? Because I have to get going. But just a few, right? Fed, we looked at Algo's the same, Trozlo's, IOTA, Eagle's the same, I believe, right? We looked at Aptos now, right? ICP, these are some olds. Like, and if you want to size up, Tau, these are the ones I'll be looking to just slowly just get into, right? For spot. Yeah, of course, bro. What's the question? Yeah, so TPO charts, the umbrella term for them is market profile, right? People use the term market profile a lot, but if you're talking market profile, people just put a normal fixed range volume profile up and call it a market profile. It's not. A fixed range volume profile is a fixed range volume profile. A TPO chart is a TPO chart. What you are talking about here is you are talking about a. I get this. Go back to BTC, for example. You are talking about this right here. Oh yeah. This right here is the market profile. Now, my most used order flow tool is still footprint charts, right? Footprint charts is still like, on a day-to-day basis, I use the footprint charts. But market profile is nice to know when, like I said, you're out of value versus when you're in value. Like on a trending day, it's not really going to be that helpful, right? But for example, what we can see BTC doing on a 4 hours is have a big move down, get way outside of value, value's all the way here, come back to value, reject, right? Get down, come back to value here. This was rejection from value area low, right? Come down, get back to value, point of control, reject, right? And now the last few candles have just been down, but now what you should expect is, since you're so far out of value, as soon as some sort of bottom is coming in, you're expecting first this. If you can get above this value area, you go to here. If not, that'll be your next level high and you just carry that trend lower, right? So the market profile is the TPO plus the volume profile together, right? The TPO is on the left, the time price opportunity, the volume profile for the sessions on the right. Together, they're the market profile. Yeah, but I do use them. Yeah, not as much as the footprint charts, but I like to use them to see when we're in versus out of value. It's very important to know that, and how much time are we spending at a particular area, right? What's the session like? Looking within the session itself in terms of time. They're helpful, bro, for sure. They're helpful. Yeah, they can help you know again. Are you extended? Are you in value? Are you out of value? Right. It's very easy to know that on a session to session basis, not just for crypto, for stocks, for indices as well. No problem, brother. It's possible to see limit orders on Atash, yes. 15-minute delays are normal for free accounts, bro. Yeah, that's the only downside. There's a 15-minute delay. If you want, but I think that 15-minute delay is for that's for, what's the word? That's for stocks. Unless you pay for stocks and commodities. That's what. Last I read, when I first started using Atas for free, there wasn't any delay between the feeds. So I can actually can search that up, unless they've changed it. But when I first started using Atas, there wasn't any delay on the crypto side of things. Does Atas have a delay on crypto data? Yeah, no, so the Atas platform provides real-time data for cryptocurrency exchanges. Yeah. This is nicing the crypto people. That 15-minute delay, if you're using if you're using the demo account, there'll be a delay there. There's a 15-minute sim delay. Atas sim delay is in the demo account is for 15 minutes. And for Atas like Nasdaq and stuff, you're gonna have to pay anyway. But for crypto, they've knifed the crypto bros. I think they feel sorry for the state of the market for the 4 years. There's no delay on it. But for most people, it's like you don't need a task, right? You can just use TradingView. I only like using a task because of like visually speaking, the depth of market and stuff. Like it's nice to look at with a task. But otherwise, it's like you don't need it. Like you can just do it through TradingView. But since it's free, like if you want to like try it out, like be my guest, try it. ETH against BTC, nice. Honestly, this is one of the only hopes I've got looking for ETH. ETH's already at 2,000 something, right? Like I don't know if they're gonna send it to 800. That's the in terms of higher time from liquidity pockets, we have a unfilled fair value gap all the way down at 800. But what I'm talking about here is, of course, this. It's dropping less than Bitcoin is. Simple as that. It's above its macro point of control still. Whether this is distribution or whether this is just the next consolidation sort of before like the next move up is going to be obvious in hindsight, right? On the lower time frame, obviously the trend has been downside. We've been very aware of that, right? Which is why I've been very slow and methodical with adding bits just daily, very small contracts of ETH against BTC, which is going to add up over time, right? That's what I've been doing. Same with LTC. But as long as we can maintain above this, and especially if we can maintain above 2020 12-month seller zone mid, I'll be targeting higher for ETH against Bitcoin, especially given the state of Ethereum. It's like how much more we're now at the yearly cluster. We've lost historical price mid. At this rate, we're gonna go back to key inflection area again, right? Who knows? Maybe they give us a smiley face, big smiley face. We had that one, but maybe they give us a big smiley face. Who knows, right? But we'll have to see, right? But I don't expect us to break this range straight away. Just to go down here, I don't expect that straight away. So let's see what we get. Like this is the cluster now where, again, if you want to scalp something, Ethereum is at yearly levels right now. You just got to watch, be patient and watch what kind of reaction this gives around the yearly levels. Ethereum's another one you can scalp very, very easily, right? Bitcoin's below its key level like we've seen, but Ethereum's at yearly levels. So for that reason, I'm still hopeful for ETH against Bitcoin. The trend is still to the downside, right? I'm not saying we're out of the woodworks or anything. The trend's still to the downside. This is just like let's say like a feeling. I don't know. We might get one more stab lower, but ultimately, I think even if you get a stab lower, I think it sort of reclaims, and then I think ETH against BTC goes higher. But we'll have to see. Otherwise, this has just been the weakest rally we've ever experienced in crypto ever. We haven't even hit T1, right? It's that weak. So yeah, well, we'll keep an eye on things. Anyway, guys, I'm gonna end this recording here. For those of you wanting to do Elliott Wiggs and Wyckoff from next year, the sign up ends tonight. But that's just for those who want to do it. If you don't want to do it, that's completely fine. You don't need to do it. But apart from that, I'll do a stream on Sunday, and we'll go over like more altcoins, right? And if there's any particular stocks or crypto you guys want to look over, you can make like a notes of it, and then bring it with you if you can make it on the Sunday stream. We'll go we'll look at it like a detailed view of everything. Now that we've got such deep discounts, I think it's time to do like a detailed view on everything. So we'll get that done on Sunday. Sunday is also when I'm finally opening the accounts for the hedge fund, like actual trading account for the hedge fund, for my own hedge fund. So it'll be a busy day. But yeah, I'll see you guys on Sunday. Yeah, I'll end this recording here.